Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On Wednesday, the Australian dollar bulls showed their presence after engaging in front of the challenge, or the yearly lows around 66.80.90, and from there rejected it quite clearly. Back in July, we saw the similar pattern. Now looking for further extension to the upside, we do need to see a break above 67.55, which is roughly 10 points away. A New York close will give us more guidance towards the upside to 67.95 to 68.65, where I've outlined here. But it all depends on this level, that is at 67.55. Looking ahead, we do have the RBA Lowy speech next, so that could actually ignite a little bit of momentum. So do be aware, that's around lunchtime today. Looking at the euro, the market staged a significant rebound from that 98.80 support. And from there, looks further to the upside and may look towards 10065.75 as a potential challenge. Still keep in mind, though, that we do still have the US Fed Powell speech later, and also the main event as well, which is the ECB rate decision. It is widely expected that the ECB will lift their rates 75 basis points from 0.5 to 1.25 on Thursday. That is around 10:15 Sydney time this evening. Let's see if the market can generate further momentum. One other aspect is that the dollar index, which measures the greenback strength against a basket of 6 major currencies, did drop away after refreshing its highs around 20-year highs, that is, around 110.76 to 109.49 and settled at 109.52. If we have seen a peak, then we could see further weakness, but we do need to still see that dollar index under that 109 to encourage the bulls to come back. And with the current pattern that's set up, there is a lot of bullish candles in here that does support a further rise. So let's see if that's the case. And with the divergence also coming in, and also the MACD is slightly positive to a weak signal here that's just broken above the zero axis, could be the ticket for the bulls to come back and take the challenge higher. The dollar yen, well, the market still remains somewhat heavy for the yen and stronger for the dollar case after the market posted a fresh overnight high that is around that region of 144. Looking at 146 as a potential target, but still be on your guard, as when we were around these levels back 24 years ago, the Bank of Japan conducted an intervention in the yen on instructions from the Ministry of Finance. However, the Japanese yen has widened its policy gap between the US Federal Reserve, and with the expected 75 basis point rate hike on September the 21st from the Federal Reserve, could actually still see some witness price action. Nevertheless, I still feel like previously that we saw back here in June 2022 that we saw 2 heavy days of pullback, that we may see that again very soon. Having posted a fresh intraday low, which was last dated back 37 years ago, the fact is, or 1995 to be more exact, the fact is that the British pound has rebounded off the 114 and posted a strong, I believe, Japanese candlestick. That is a hammer, which represents the bull family, and therefore looking for a further up test. A break of 115.70.75 could be the ticket for the bulls to see a rally on to 116 to 118 as a potential target. Also, the political uncertainty has cooled off, that is, after Liz Truss won the Tory race and become the new UK Prime Minister. Meanwhile, according to the latest data, annual consumer inflation in the UK rose to double digits for the first time in 40 years after hitting 10.1 in July. And no doubt the market is still looking to the Super Thursday next week, when it's widely expected that the Bank of England will increase its interest rates by 75 basis points from 1.75 to 2.50. In August, the Bank of England did hike rates 50 basis points to 1.75. So let's see if the market can find further momentum and rally on, as I was looking for 116.18 not so long ago, and with this bullish candle, which is the hammer from the British family, could see the further rise. Finishing up with gold and oil, the market has rebounded in front of that level of 1,680.85 and now puts further coverage to the upside. At present, though, we still need to see a close above 1,719 to give us a target of 1,727 to 1,748 to 49. Until we get that break above 1,719, still be on your guard in case we do see a tumble back to that bottom side of the range at 1,680. Finishing up with oil, well, the market plummeted 5% and reached its objective of $82.60.90, with a little bit more left to the downside due to the fact that the ADX is trending, and the technicals are remaining heavy, that we could be looking at $78 a barrel, but do be on your guard as a bullish correction could be just around the corner. So therefore could see a snap to the upside back to $85. Well, that wraps it for today. Thank you very much for joining me. And as always, look after the intraday port and I hope you enjoy the rest of the day.